And welcome, it's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. Today, of course, as always, we will take a look at where we close for the week with the broader markets, some sector rotation beginning to shape up, but overall, a bullish backdrop for the broader markets. And first up, we can take a look at some of the headline news that drove price action last week. We did see new home construction falling amid high interest rates. However, home builders did rebound and end the week higher. We're going to take a look at that group as well as other areas. We did see weekly jobless claims drop to a 7-month low. Net, the economy is still chugging along. And last up, consumer sentiment was flat amid the results of the election is being touted as the reason there, but big move in consumer discretionary. We're going to talk about precisely where and ways that you can capitalize on that. Now, next week, of course, holiday shortened week with Thanksgiving on Thursday, but we do have some pretty key data coming out. That core PCE, this is the inflation data that the Federal Reserve keys in upon. That's going to be coming out. Also, durable goods orders earlier in the week, and Q3 GDP, the first set of numbers for that GDP, will be of note how strong or not the economy is expanding for the third quarter. So from here, let's go ahead and take a look at these broader markets, and I'll share with you where we closed and what took shape last week. And here we are with the daily price chart of the S&P 500. You can see that we had pulled back to that 21-day simple moving average, certainly into the beginning of this week, as that Trump trade did wobble a bit as investors were trying to get comfortable with some of the nominations for the new cabinet next year. So we did see that pullback. However, we bullishly closed the week with the S&P 500 back above that 10-day simple moving average. We have a positive RSI and a positive MACD, so we are certainly in good standing there. As always, let's go ahead and take a look at the underlying sectors in the S&P 500. And I do have a 2-month daily price chart view with the ETFs sorted by relative strength. So let's take a look at the groupings up here at the forefront. Energy remains pretty strong up here. We can see this nice uptick. Oil prices were up last week, and the group was among the top 3 as it relates to performance again. And we did have this very nice base breakout. We can take a look at it on the weekly chart, and you will see that it goes back for about 8 months. Longer your base, the longer the potential breakout out of that base. So energy looking quite attractive at this juncture, as it has over the last couple of weeks. Up here as well at the forefront, XLF, and this is financials, all about the new regime next year being less regulatory to the banking world. And we did have this nice base breakout today in XLF on volume. We'll take a look at that regional banking ETF today as we move through. Also up here, XLY, consumer discretionary, and the sector did outperform the S&P. It was up about 2.2%, but here we are with that close back up above that 10-day simple moving average, allowing this sector to come down out of that overbought position and setting up quite nicely. We'll take a look at retail as we go forward here. Also up here at the forefront, industrials regaining their uptrend with a close back above that 10-day simple moving average. MACD black line up through the red on XLI, signaling a new uptrend. Now, from here, I do want to share with you a view in the S&P 500 of the equal weighted S&P. And I talked about rotation shaping up. Let's take a look at this equal weighted. In other words, those Magnificent Seven names are not counted in such a heavyweight fashion. And we can see that the equal weighted S&P 500 is setting up here for a new high. And that really is of note. Last week, that equal weighted S&P 500 was up about 2.5%. That's relative to the broader S&P with those M7 stocks up about 1.6%. So pretty significant there in the sense that we are seeing a broadening out of the markets beyond those mega cap growth names. We talked about energy, financials, and other areas that are sitting up here at the forefront. Of course, you will want to be aware of some of the weaker areas. Now, technology did have a very tough period last week with this significant drop. In general, growth stocks did get hit last Thursday a week ago, and we did recover with Tech XLK back up here above that 10-day simple moving average. The group was up about 2%, but also down here, you will want to be aware of healthcare. This is an area that I've highlighted quite a bit. It is going to be very susceptible to whether it is election related or policy related. And there was the announcement that Robert F. Kennedy Jr. is being nominated for the head of the healthcare, and that really shook the group up last week, but very nice recovery this week. We'll take a look at biotechs and some of those other areas as well. The purpose with all of this, as always, is to share with you where that relative outperformance is shaping up, ideally why, so that you can participate in that outperformance. So from here, let's go ahead and take a look at areas beneath those sectors. We're going to look at some industry groups, and up here at the forefront, front and center again, are software stocks. IGV, we did pull back a nice close midweek back above this 10-day simple moving average, and then a move to a new high. Software stocks have really been coming on quite strongly, particularly those with an AI angle. I am going to share with you 3 AI names toward the end of today's show. Let's take a look as we move through. Bank stocks up here at the forefront, up 2.6%. And again, a lot of that was today. There is another area that I wanted to share with you that had a really great period last week, and that is the Russell 2000. This is IWM, that Russell 2000 ETF, and it was up 4.3% last week, and a lot of it, about 8% of this weighting here, is going to be regional banks, which is why I pivoted over to this group. You can see it's having this nice V-shaped recovery. The fact that we are on track for a pro-growth environment next year, lower taxes, and we did see interest rates tick a little bit lower last week. That's generally good news. We can see on this yield on that 10-year, it is sitting here at 4.4%. Now, I talked about XLY, consumer discretionary. Let's take a look. This is XRT, the S&P retail ETF, a nice 2-day rally. Of course, Tesla had a big part in that. The stock was up almost 10%, but there were certainly other areas in this retail space that have been on the move higher. We did get several bellwether names reporting their earnings last week, and among the winners was Walmart. We'll take a quick look. Certainly not a small cap name, but it is sitting up here. Nice base breakout. This is one of the select retailers on my MEM Edge suggested holdings list, my twice weekly report. We did get into it a while back and have been participating nicely in that uptrend. Moving through and looking at some of these other areas, semiconductors, and this is a very cyclical area, and it is still trying to recover. Last week, NVIDIA's numbers did not impress so much. We can take a quick look at the stock at this point, and NVIDIA on the daily chart is really backing and filling in a bit of a base building formation. And from here, of course, ideally, we do want to get that black line up through the red, indicating a potential new uptrend. But the fact that earnings, which is often the key driver of these big new uptrends, did not budge NVIDIA is a little bit concerning. We're keeping an eye on that. And then, of course, the entire semiconductor group. Let's go ahead and move through. I talked about these building stocks, XHB, and here we are, double bottom formation, and the group poised to break back above this 50-day simple moving average. This is the home builders ETF ending the week strong note. and we do want to get it back into that bullish territory. And then biotechs, again, I talked about it getting hit last week because of the announcement relating to the new potential head. And you can see that we are in a V-shaped recovery. This is biotechnology, IBB, and really quite volatile, but it did recover quite nicely last week, up 3.4%. And last up, I do also want to share with you another area that is setting up fairly nicely, simply because it's in this healthcare space and it did not decline with the rest of the sector. And that's IHI, Medical Devices ETF. It is the growthier area of healthcare. And I do have two top names again on my MEM Edge list that have been faring really quite well. So let's go ahead and take a look at the Dow. I will say that I did not cover that chart this week, but the Dow Jones Industrial Average was up quite a bit today. And with that in mind, I did want to share with you the components in the Dow, those 30 stocks that make up this particular index. And this is exemplary of that broadening out that I mentioned, where we are seeing these other areas of the market come into play, which in turn boosted the equal weighted S&P 500. So here we are with the Dow components, those 30 names. I've added this RSI indicator, sorting it in descending order, and take a look up here at the forefront, consumer-facing Disney, Walmart, and Procter and Gamble. In fact, consumer staples had a very good week last week, and you can see that we are on the cusp of this lengthy base breakout with Procter and Gamble. And then also we talked about energy, CVX, and this stock is continuing to power higher after hitting a near-term low back here at the beginning of September. So moving through this list, of course, you do want to be aware of these weaker areas in the Dow that are underperforming. And what I did want to point out is we are seeing some bottom fishing shaping up. So these two groups here, this list here on this column, and then here are your weaker names. And take a look over the last 2 days, we have seen some buyers coming in taking a look at these down and out names. Nike, of course, having a very difficult period with China's expansion really not shaping up. And what I wanted to share with you with this view is what to be on the lookout for a potential downtrend reversal. And we'll take a look at a couple of other names beyond this. Here we are with Pfizer, PFE, and the stock has really sold off. We are in an oversold position. The stock did close today above that 10-day simple moving average, and we have that RSI heading north. Now, we are not out of the woods yet. I will need to see that black line come up through the red. Let's go ahead and annotate an earlier period. And of course, you will want to take a look at the news that will drive that potential downtrend reversal. Here we are back at the end of April. We had that MACD crossover. The stock did close back above that 10-day simple moving average, but we definitely want to get that RSI into positive territory. And that, in fact, takes us to this period here. And then we had a nice rally. So a little too early. You will want to have a rules-based system when identifying potential downtrend reversals and really make sure that your money is being put to work in a positive fashion. So from here, I do want to share with you another view that you can actually take from stockcharts.com to give you a really good sense of where price action is moving and the momentum is shaping up. So down here with this sector summary, there is what's called a small cap S&P 600 view, and it's telling us today where that outperformance among small cap stocks took place. And up here you can see consumer discretionary, healthcare, technology, and so on down the line as far as the strength today. And then another view of these small cap sectors in the S&P 600. And you can see up here at the forefront, I'll share with you, this is the industrials group. We have staples, energy, financials, and utilities appear at the forefront among small cap stocks. If you are interested in participating, you will want to search in those areas as they are faring quite well. And then here we are with PSCT, the small cap tech. And you can see by and large, small caps are going to be more volatile. So of note, but nice recovery there in the tech group as well. So I talked about XRT and retail stocks. Let's take a look at some of the names that have broken out this week in this retail space that are larger cap. And here we are with Burlington Stores, BURL. We can see today that the stock gapped up into a base breakout. Now, I will tell you, it is a gorgeous chart in the sense that we had that base breakout take place on heavy volume, and also in looking at that MACD. Let's see my drawing skills here. The MACD is up here in positive territory, but it has quite a bit of runway as far as the ability to trend higher from here. And this is today's gap up into a base breakout on heavy volume with a bullish RSI. Now, you will want to be aware that they are due to report their earnings on Tuesday. I'm not a big fan of buying stocks going into earnings. I would put it on my watch list, but it is a very attractive chart. Another name that was up quite a bit today in this retail space is Deckers. They, of course, are the UGG boot company, and then also the Hoka sneakers. And DECK also had a gap up into a base breakout. They are not. They have already reported their earnings. Today's big 5.6% move is because of a Wall Street upgrade. Here we are with that gap up. Not really easy to determine, but it was on above average volume with a nice bullish MACD and RSI. Of note, we are a little bit overbought with this RSI up here above 75, but you can see it has an ability to withstand that and still gain from there. Other names that we can take a quick look at are CMG, Chipotle. And what I wanted to share with you here is another name that did have a nice base breakout, nice volume today, and we did experience that black line up through the red with that MACD crossover. So also up here, that is a name well known that is close to breaking out, and this is Home Depot, HD, and we can see that the stock is very close. In fact, I might argue that they did, nope, very close though, have that nice base breakout, nice heavy volume, and then here we are with that black line up through the red with that MACD. So those are names that are very interesting because they've experienced that base breakout. Home Depot already reported their numbers. Let's take a look at stocks that are more of a turnaround. And these are all going to be well-known companies in that retail space. First up here is DKS. This is Dick's Sporting Good. What's attracting me to this name at this time, as far as a watch list candidate, is the fact that it did close back above that 50-day simple moving average. Now, we've had several downtrend reversal attempts that have faltered. And at this point in time, we do have a bullish RSI and a nice MACD in an uptrend. I would need to see that MACD get back into positive territory before considering the name as a possible candidate. Another potential for that watch list is Ferrari, RACE. The stock faltered on earnings, but it closed today above this 10-day simple moving average. We do have that MACD poised to have a crossover black line up through the red. But again, in lining up those characteristics that signal a nice new uptrend, you will want to have as many of these constructive characteristics as possible. So going back to this August period, we did have that nice MACD crossover, but it was taking place in positive territory above that net neutral. We got nice high volume, and we also had that RSI up here in positive territory. So at this point in time, again, a watch list candidate, not ready for prime time just yet, but looking a little interesting. And also looking at another possible turnaround is a name that really didn't go down a whole lot, but this is SHAK, SHAK, another name from my MEM Edge report. We did get into it prior to this nice earnings related move higher. Now, what took place beyond that is the fact that SHAK did get an RSI up above 70, and this pullback allowed the stock to get down from that overbought position. We are now back in positive territory with that RSI. Let's see if we can close back above that 10-day simple moving average and ideally get a nice MACD crossover. And last up, I did mention I was going to share with you AI related stocks. Now, we all know about NVIDIA. Many of you may be familiar with Palantir, PLTR. This is another winning name from my MEM Edge list, suggested holdings list. And what I wanted to talk about today are really old school companies that have been around for quite some time, but are really moving into and have been at the forefront of this AI move, and you may not consider them as candidates. First up, let's take a look at IBM. Of course, Big Blue has been around forever. They have been really focused on AI since the early 80s. And what we are looking at here is IBM on the daily chart. And we did get into this oversold position with that RSI down there below 30. We are in a spot now where we have a nice double bottom formation. I'll go ahead and mark this up very quickly so you can see precisely what's shaping up. So we had this bottom that was hit here, a rally attempt, and then another low near term. That's your double bottom formation. We did close the week back above this 50-day simple moving average. We have a positive RSI, and take a look. We did experience that MACD crossover with the MACD super close to getting into positive territory. Let's take a look at another long-standing, rather old school type of a name, and that is DELL, DELL. Now, the company does still sell PCs, but they have really moved into the AI space, and they do have servers and other AI related hardware that is in demand. Now, what I will tell you with DELL is that they are due to report their earnings on Tuesday, just of note, but we did see a nice black line up through the red here with a gap up, the stock rallying, and that RSI in positive territory. So it's on my watch list as far as seeing how they fare during earnings on Tuesday. Last up here is Oracle, well-known stock, and we can see this is earnings related, news related gap up. We had this lengthy base building period into a new uptrend for Oracle, ORCL, and the company has partnered with NVIDIA, also with Elon Musk AI space, and it's all about AI and cloud computing. So that's it for this week. Everyone, have a fantastic holiday next week. I'll look for you here again next Friday.